Yes, welcome to question number 5. Now, part A, question number 5 reads, Mapato Sacco Limited has invested heavily in the development of human resource accounting procedures. Justify the investment. Mapato Sacco Limited has invested heavily in the development of human resource accounting procedures. Justify the investment. Now, in terms of justification of the Mapato Sacco Limited investment, investing in human resource accounting procedures, here we are going to discuss and say that investing in human resource accounting is a very strategic decision that offers several benefits for Mapato Sacco Limited. So some key justification is that the first one, they're likely to have improved employee productivity. In other words, when we are able to track the human capital investments, this allows an organization to evaluate workforce efficiently. So by analyzing employee performance, businesses can identify skill gaps and provide necessary training to enhance productivity. So here, in terms of if Mapato Sacco Limited is going to analyze its procedures, its accounting procedures, it gives it the best avenue to determine the gaps that are there, and of course to make a strategic decision in terms of how to train. Of course, like for example, it's about training to train those employees where there are gaps, and this will lead to the organization increasing its productivity in terms of the total performance of the organization. Like for example, as an example given here, if Mapato Sacco Limited observes that customers or customer service employees handle fewer inquiries compared to industry benchmarks, they can implement customer relationship training to improve service delivery. So this leads to quicker response times, higher customer satisfaction, and of course it's going to increase productivity within the business. The second justification is that there is likely to be better decision making. So the human resource accounting procedures provides valuable insights into the employee contribution, allowing management to make informed decisions regarding hiring, promotions, and the workforce restructuring. So when we are looking at this human resource accounting, we are trying to look and quantify the value of the employees that they are bringing. So by determining the value of the employees, or even like for example, we have been discussing about, we will want to understand the cost that you are likely to incur to replace an employee, the cost that you are likely to incur even in hiring and training and all those. So once we have this information, they help the management in coming up with the right and the best decision that will be effective for the organization. So like for example, if data shows that experienced loan officers generate higher revenues than new hires, then it means that the company might prioritize mentorship programs and strategic hiring rather than recruiting in bulky. So this ensures that you have a more skilled workforce who are likely to bring better results compared to having quite a large number of employees, yet they are only bringing minimal impact to the company. The third justification is that there are likely to be accurate financial reporting. So employees contribute significantly to business operations, and their impact should be reflected in the financial statements. So the human resource accounting helps to quantifying this impact, presenting a clear picture of the human capital value. In other words, yes, the organization is performing well, but we need to attribute this performance to the employees. That is why we are doing the human resource accounting, in that we can be able to understand that the amount that we spend in training facilitates that high trained employees are likely to perform much better compared to maybe lowly trained employees. So like for example, in banking, Loan officers influence revenue generation through successful loan approvals. So by integrating performance-based metrics into financial reports, Mapato Sacco Limited can assess employee profitability. Then we have the fourth justification is that compliance and legal benefits. So proper HR accounting ensures businesses comply with labor laws and corporate governance regulations. So this helps to minimize legal risks related to employee compensation and the workplace policies. So like for example, if Mapato Sacco Limited systematically tracks work hours, overtime, and benefits, they avoid disputes regarding employee payments, ensuring that adherence to labor laws. So this prevents lawsuits or penalties relating to the wage discrepancies, which helps Mapato Sacco to save or to avoid unnecessary costs. Then the fifth justification is about cost management. Human resource expenses, including salaries, benefits, and training, need to be strategically allocated to maximize the return on investment. So human resource accounting helps reduce unnecessary expenditures by identifying areas for financial optimization. So when you are doing human resource accounting, here we are trying to justify, like for example, this person is earning this amount of salary. What value is he bringing to the organization having earning this amount of salary? So when you are earning a specific amount of salary, what value are we getting in terms of your duties, your performance, your results that you are getting, and stuff like that? If we are spending this amount of money in motivating employees, in training employees, in return, how does it reflect in performance? So like for example, if HR analytics reveal that certain training programs do not enhance employee performance, then they can be replaced with cost-effective online learning modules tailored to staff needs, which helps to save expenses while improving the skills. The sixth justification is about strategic planning. The human resource accounting enables organizations to align human resource strategies with long-term business goals. So this helps ensure sustained success through the workforce planning. So like for example, if Mapato Sacco Limited intends to expand its services nationwide, then they must analyze employee skills, workforce distribution, and anticipated hiring needs to support growth. So strategic HR accounting ensures that they maintain staffing balance and avoid shortages or excess hiring. And of course, we have other justification. It's going to enhance employee satisfaction in terms of employees feel valued when they contribute or when their contributions are recognized within the organizations, leading to improved morale and job satisfaction. So the human resource accounting provides transparency and fostering a supportive work environment. So in other words, even as an employee, if you know that your contributions, if you know that whatever you are doing is recognized by being rewarded, by your decision being taken, your contributions, your suggestions being taken into action and stuff like that, that becomes a motivating factor. So if performance evaluations show that customer service representatives are exceeding expectations, then Mapato Sacco Limited can introduce a reward system such as bonuses, promotions, or even professional development opportunities to motivate the employees. Of course, another justification is that it gives a competitive advantage. So strong HR accounting practices positions organizations favorably in the market by attracting top talent and improving employee retention rates. So when you are quantifying, when you take the value of employees seriously, when your organization is known as to be an organization that is having great value in terms of taking into consideration employee efforts by rewarding the employees, paying a salary that is equivalent to the work that the employee is doing and all that. So you'll find that you will attract the top talent, and of course you will enable job retention within your organization. So for example, leading companies often use data-driven recruitment strategies to hire skilled professionals. So by leveraging HR analytics, Mapato Sacco Limited can identify successful hiring patterns, ensuring that they attract and retain the top talent, maintaining their industry standings. For instance, banking institutions using the human resource accounting can assess the profitability of its loan officers based on their customer relationship and transaction volumes. Now, let's move to the second question. HRMPEB Publishers Limited have planned to undertake a benchmarking exercise of human resource accounting. Explain the challenges they are likely to encounter in carrying out the exercise. HRMPEB Publishers Limited have planned to undertake a benchmarking exercise of human resource accounting. Explain the challenges they are likely to encounter in carrying out the exercise. Now, when you talk about having planned to undertake a benchmarking exercise for human resource accounting, in other words, it means that HRMPEB wants to go to a top-class company and try to find out how that top-class company is able to account, or how does it manage its human resource accounting in that organization, so that they can be able to get to learn and maybe apply some of the lessons that they're likely to learn from a well-performing company on the same. So the challenges in this benchmarking human resource accounting that HRMPEB publishers are likely to face. Now, when you talk about benchmarking HR accounting, this involves comparing organization practices with the industry leaders in relation to what you're doing. So some of the challenges here is that you're likely to get data inconsistency. Now, when you talk about data inconsistency, different organizations use different methods or varying methods to account for human capital. So this will lead to discrepancies in recording the data. So some companies focus on employee productivity metrics, while other companies prioritize training expenditures or even employee engagement scores, making direct comparison to be difficult based on different organization in terms of what they're doing. Like, for example, a multinational corporate may calculate the employee value based on revenue contribution, whereas a publishing firm like HRMPEB Publishers might prioritize editorial efficiency and content output, making it harder to benchmark using the uniform data due to different data from different organizations. The second challenge is in terms of confidentiality issues. Firms are often reluctant to disclose sensitive employee-related financial data. So such kind of salary structures, training investments, and productivity levels due to privacy concerns and competitive risks. So sometimes very few organizations are likely to give full detail or information, or the correct information in relation to the financial information of their employees, like salaries and the other expenditures. So, for example, a bank may refuse to share its loan officers' performance data, so fearing it might expose competitive weaknesses, while a publishing house might hesitate revealing the editor compensation and workload distribution. Number 3, the third challenge is lack of standard metrics. There is no universally accepted framework for measuring human resource value, which makes benchmarking complex. So different industries use different metrics as human capital return on investment. Others use revenue per employee, or others use talent development indices, so leading to inconsistencies. So there is no a standard form of measuring the human capital that different all the organizations will use. So every organization has got its own way of measuring the impact of employee capital. So the IT sector may benchmark using metrics like code productivity per engineer, while a publishing company might assess performance based on the articles edited per week, making cross-industry benchmarking become impractical. The fourth challenge is subjective in human capital valuation. Now, when you're talking about this, human capital value is influenced by intangible factors such as creativity, innovation, teamwork, and even leadership. So this becomes difficult to quantify using standard financial metrics. In other words, you cannot use the amount of money that somebody earns to determine how innovative that person is. So like for example, 2 editors in a publishing house may have the same word count per day, but one consistently produces high quality, so engaging content, while the other delivers mechanically accurate but uninspired writings. So the challenge becomes in evaluation, because if it's about articles, the 2 publishers maybe publish 3 articles every day, but you find that as much as they are publishing 3 articles every day, one's articles are more quality compared to the other ones. So people prefer using their quality ones compared to the other one. So it becomes difficult in terms of quantifying that, especially in a situation whereby all of them are able to print 3 articles in a day. The other challenge is resistance to change. Employees and management may perceive new accounting procedures as intrusive or unnecessary, leading to reluctance in adopting benchmarking processes. So like for example, if Aswati Publishers Limited introduces a performance-based salary adjustments, employees might resist if they feel their work cannot be fairly measured using numerical metrics, especially in creative roles. So we have another challenge in relation to dynamic workforce trends. The rise of gig employment, freelancing, remote work, and hybrid models complicate the traditional human resource accounting benchmarking as workforce dynamic continues to evolve. Like for example, while the tech firms rely on remote engineers or software engineers, publishing houses might hire freelancer writers and editors. So making it difficult to create consistent benchmarking between different workforce models, or even where different the people working, or where you are going to benchmark specifically, you are completely in different fields or different industries. Then we have the cost implication. Benchmarking requires significant financial investment, so including hiring consultant, implementing analytical software, conducting extensive market research to gather reliable data and all that. So for smaller or middle organizations, they might not afford such kind of costs. Then another challenge is time constraints. A thorough benchmarking exercise demands time and effort, so potentially diverting attention from core business operations, leading to disruption of workforce and focusing on benchmarking, so which at the end of the day affects or disrupts the operations of the organization due to such kind of exercises that are taking place. Thank you. And that is how you answer those questions.
So if you like this video, you can always enroll with us. You'll be able to access more of these revision sessions. And also you'll be able to find well done lectures or pre-recorded videos for all the KASNEB courses as well as CHRP. And in case of anything, you can always reach us out. We have our contact details on the screen. Feel free to call, feel free to WhatsApp anytime. So thank you, and let's meet in our next session.